to waste you and my time. For those who were early will start, and perhaps probably some people might join a little bit later and miss the beginning. So be it. Don't want that to wait too long. So once again, thank you for joining this event here, this webinar here tonight. And I'm not sure whether all of you know me, so let me briefly introduce myself to you. I'm Jochen Siebmann from Germany originally. Yes, that's how we pronounce my name. The J is pronounced like a Y in English. I'm a basically professional investor. I make my living out of properties. I'm also author of the book Property Apprentice and run property investment training programs in Singapore and also some other Southeast Asian countries as well. I speak at events, small events, big events. I've had the pleasure of sharing the stage with people like Tony Robbins, Mary Buffett, Dean Graziosi, Nick Vujicic, Joel Bauer, Richard, and Patrick from Success Resources, and many others in some of these events. So maybe you can take a screen print or take a mobile phone out and take a picture of this slide here. This is for those people who are early or at least on time. I would like to give you this gift. I have developed this app that called the Property Apprentice app, and it's free of charge, nothing for sale there. It has some good investment templates you can download from there, property calculator to calculate yield and return of investment, and so on, which is in this function up here. So it's if you have iPhone, use this link, and if you have Android, you can use that link and get it free of charge from the iTunes Store or Android. Just some legal stuff as usual before. Whatever I say, do your own diligence, right? All forms of investment carry risk, and you have to do your own diligence. I tell you what is my opinion, but you cannot really hold me liable for it. That's the short version of this disclaimer. So now as investor, when we look into property investment, of course there's many other forms of investment too, but obviously we're talking about property investment here. Then there's two major forms of investment, obviously, that we are mainly interested in. Types of return that we're mainly interested in, which is, of course, the capital growth that we don't really know in advance so much, right? But we have a perspective on it, as well as the rental yield. And we're going to look into the perspective of Bangkok in that context here, of course. So I think many of you who might have joined this event are from, or at least live in, Singapore. And as you probably, or definitely know, the property market here has been quite depressed for quite some time, even though now it seems to be sort of reaching the bottom. So many investors have looked overseas, including myself, where to invest our money. And one of my personal preferences is actually Thailand. And why is it so? Firstly, you find investment opportunities there that have quite a low quorum, which is our jargon for purchase price. Right? You can get a unit there for 150,000 or even less sometimes Singapore dollars, 200, 300,000. You get a really, really nice one in an excellent location, which if you buy a property in Singapore, probably doesn't even pay your ABSD yet to the government, let alone being able to get a property for it. Right, so the second reason why investors look into overseas, okay, somebody joined, welcome to the webinar. We already started just now in the interest of time, but you haven't missed much yet. So the second reason why people look into overseas is, of course, no TDSR, ABSD, and SSD. Right? TDSR, total debt service ratio, means you cannot take so much loan compared to the salary, and if you already have a mortgage in Singapore, you might not be able to get a second one here due to that regulation. And then the additional buyer stamp duty here for Singapore property is quite high, depending on the nationality and how many properties you have, of course. But it's between 5, 7, 10, up to 15%. And in $1 million property, that can be a sizable sum you just pay to government. And also when you sell it within 3 years, you have to pay seller's stamp duty. All this does not apply for many overseas investment, in particular, obviously, when we talk about Thailand here. The rental yields is higher than Singapore. Transaction costs are lower, and that what attracts a lot of investors, as well as capital appreciation. Naturally, I think that's the main reason why a lot of investors come. What we have to look at, and a lot of people are scared of, is also the risk. Right? When you invest overseas, there is risk, but there's always risk in everything. Right? If you cross the road, you also have a risk, or you take a cab, you also have a risk, but you still do it anyway. So it's not a reason to shy away, but what you have to look at as an investor is how big is the risk and how big is your potential reward. And obviously, the reward that you can reap needs to be reasonably sizable, bigger than the risk you're taking for it. So what is a risk anyway? Risk is basically an uncertain event that, if it occurs, has a negative or positive, actually, in true definition, impact on your investment. Right? So that could be the market going down and or not finding a tenant, etc. But all these risks can be mitigated. Which also one part I'm teaching in my course, but that's not really the topic today. By the way, if you do have any questions or I speak too fast, you want me to repeat, please just type into the chat box. And there's one more participant joining. Good evening. Thank you for joining. But if you have any questions or you want me to repeat, please type in the chat box. If the question is not directly relating to what I'm saying, then I might be able to answer it at the end, but not during the presentation. But if, for example, you don't get what I'm saying, then just type, please, and I'll repeat or explain again. Now, when we look at risk, right, it's fairly easy to handle it. There's a simple process you can follow. Right, first you identify what are the risks. You assess how big they are, you evaluate what you can do about it, and mitigate them by whatever means necessary depending on the risk, and then later, of course, monitor and control them. Right? So it's nothing to be afraid of. It's something you can control, and if you want to learn more about it, you can, of course, learn more about it from me later. Today I will focus obviously on the topic. Right, so risk management or risk has two dimensions: probability and impact. How high is the probability of the risk becoming an issue for you? And if so, what is the impact for you? Right, and that's what I always say is the most important thing in your risk management is to do your due diligence. Right? So if you buy a property, especially overseas, but also in Singapore, right? Do your homework, check who is the one selling to you, is it reputable, who's the developer, do they have to do track record, or are they selling their first property and you don't know what's going to happen, whether they actually build it or not. As well as one of the big in overseas investment, big risk is the currency risk that you obviously face, right? If some of you might have done investment in Malaysia many years ago, you might have a profit in ringgit, but back in Sing dollar, it looks quite different. In Thai baht, of course, we also have a risk, but the Thai baht. I've been investing in Thailand for more than 12, 14 years. It's pretty stable since then. But one other way how you can reduce the currency risk is if you take a loan, then take it in the same currency as the asset. So in Thailand, obviously, that would be in Thai baht, not Sing dollar. So if the Thai baht goes down, then also your debts go down, right? So same currency as the asset for your liabilities reduces your risk. And many people don't know that actually it is possible to take loans in Thailand itself, even if you don't have a work permit. The interest is not so low as in Singapore here, obviously. But if you want to take loan, it's possible with a higher interest rate, and it doesn't affect your TDSR here in Singapore, and then reduce your currency risk. So now, why would in emerging markets like Thailand compared to Singapore, the same risk apply, obviously, just maybe to a different level. So let's look at the currency, how it has developed over the years. About maybe 2008, the Thai baht was about 24.5, got even stronger after the financial crisis. That's probably more because the Western currency got weaker rather than Taiwan stronger. And then sort of pulled back to that same level where we are now at about 24.5. So over many years, nothing much has happened. And that's why I'm still quite positive about the Thai market. That we don't have a big cut. One of the reasons why I'm still good on Thailand is that we don't face a big currency risk. The second risk that investors are afraid of is the market risk. That means that the housing prices will go down. Now, if you look at Thailand, what has happened in the last 10 years or so, you see the housing price index here in two dimensions on the left and the right side. Right, so particularly, you would focus on the condominium, the blue line, because foreigner cannot buy landed property in Thailand, so only condominium. But if you look at what happened since then, it was basically every year has gone up, and from 100 to 150, at least 50, 60% over the last 10 years. And as of now, this is poised to continue, I believe. Later, I'll tell you why. Right, so even though there's more supply coming up, which some people mention that Bangkok is building a lot of property, that's true. But there's also a lot of demand, right? Actually, the many good launches get sold relatively quickly, and most investors, I believe, want to rent out. Of course, a few might like the apartment in Bangkok for their own stay and all this, and then stay themselves. But the rental occupancy is still above 90% there. And if you see what's happening there, the economy is still doing reasonably well in China. But I think in the long run, what China is doing has a big impact there, right? With the One Belt, One Road initiative and the high-speed rail network that goes from Singapore, KL, Bangkok, Chiang Mai up into China, and the north-south axis, as well as on the east-west axis from Myanmar via Bangkok, Cambodia into Vietnam, also a thriving economy. And Bangkok is right at the crossroads there, right, of these both networks. And China tourism is on the rise. I don't have the statistics here, but it's just a lot of things happening there. So what might have stopped you from making overseas investment is probably your little voices that tells you why not to do it. But if you do want to do it, as Tony Robbins said, the only thing that keeps you from getting what you want is the story that you keep telling yourself, or reasons why not to do it. Because we have been conditioned this way, it's normal, right? But if we just break our chains, this can be easily done. So let's look at what actually drives property prices, and then let's put it into the context of Thailand, what's happening there. Firstly, obviously, like anything else, price is determined by supply and demand. Secondly, in the case of property, by the demographics and the economy, how the economy is doing, by the interest rates, right, where it's affordable to finance property, because a lot of people cannot necessarily pay 100% cash. The government policies, the affordability, obviously location, as well as the infrastructure. So I mentioned just now, Thailand has quite a lot of supply of condominiums, but also a lot of demand, right? So I actually personally bought a unit in Bangkok about 2 or 3 weeks ago. And I made my down payment, and only about a week later I got an offer from somebody else who didn't manage to get any unit in that development, and offered me about, based on my down payment, not based on the condo price, but based on my down payment, about 50% more already than I paid. Right? So I could have made 50% on my down payment in 1 week. That's how hot it can still be if the location is right and if you have a good developer, obviously. Demographics. Thailand, I think, still enjoys a reasonably good birth rate and not such an overaging population, not as much as Vietnam, which has a lot of younger people, and still pretty okay. Economy doing not bad, not great, but they don't get so affected by the global economy because it's largely actually domestic driven. Interest rates, although maybe around 6-7%, not low, but also not extremely high. So still manageable, I would say. Government policies allow foreigners to make investment in Thailand. This has been the case for many decades. That's why it's quite a mature market. Many foreigners have bought there in the past, previously from the Western countries in Europe and the US. Still buying now, but now obviously a lot of people from China, Hong Kong, Taiwan, there's a big demand who want to bring their money out of China. And for them it's, or Hong Kong is even more expensive than Singapore. For them it's very cheap to buy there, so they don't even think twice. For them definitely very affordable. Even the Thai people, there's a lot of rich people and they buy property because property has been proven to make people wealthy over a period of time in the long run. Right? You just got to choose the right location, the infrastructure in Thailand I mentioned already just now what's happening there. Right, so Thailand has been good for foreign investors for many decades. As you know, obviously we have some political woes with the military there going in every couple of years. It's a kind of a standard operating procedure for them. But at least the military does not really interfere in the property market that much. And what is really the opportunity in Thailand is very attractive rental yields and potential for capital appreciation both. Usually maybe you only find one or the other in a particular market. But Thailand, what are we talking about? At least 5-6% for rental yield. For some of the cheaper units, also even up to 7%, compared to Singapore, where you maybe get 2 to perhaps 3% rental yield that typically cannot even cover your mortgage payment. I'll show you later about capital appreciation potential. and the risk I discussed earlier on already. All right, so let's look a little bit about the market. For those of you who have participated here tonight, I can send you this presentation later for your reference, and I will also give you another gift other than my app earlier on later that I can send you, because it is a bit too small to read. But I read a lot of research from research companies like CBRE or Savills, and this one from CBRE said the overall condominium market was slower, with downtown area performing better than the suburban market, which face more challenge. But buyers in the downtown market have become more selective and more cautious. But generally, sales rate has slowed down, and projects that matching the target purchases have doing better than average, and so on and so forth. Record prices are being achieved in the downtown area, but not in all locations. Why it's so important to choose the right location? That is really absolute key. This is also courtesy of CBRE. We see how much new condominiums have been completed. Now, in the last couple of years, there was really a lot. But we see in the years to come, for at least as what is confirmed right now, there isn't that much in the pipeline anymore. So that's why I think people are not really too worried about it. And what they're forecasting for future units, depending on different areas of Bangkok, is, and what has happened is the price was more or less, except in the financial crisis here, a pretty steady rise. And at the riverside, so near Saturn, but at the river, we're talking about more than 320,000 baht per square meter already that you have to pay for the unit, where at that time it was below 100,000. Is this going to continue? I don't know. But from what market says and research says, to some extent, yes. Okay. So when we look at the demand side, just now we saw the supply. This is the demand for apartments, and that's what I mentioned earlier. It's really, really strong, with almost 96% in the downtown area being occupied, right? So you wouldn't have much to worry about not being able to rent out the unit in downtown, in an area, in a good location. Obviously, you might probably not want to have something too ulu or far out, for those who don't speak English. Been here too long, sorry. Right, another factor that comes in now is tourism, right? From China, from India, from Taiwan, Korea, a lot of tourists coming. How does this affect the property market? Well, actually, I mean, a more new model for property investors is not renting units out in the long term, but doing things like Airbnb and similar websites. They do short-term rentals for tourists or business people that come to the city. And even if they don't take up every single night, maybe only 15 nights a month, actually the yield could be higher than on a long-term rental. Because you simply can charge a lot more per night than you can charge per month. Yeah, China buying a lot of properties in downtown as well. This is an overview over what's coming up in the future. So the market, we believe this is a price projection from CBRE, not from me. Okay, I didn't make this up. So this is how they see the market. So Is it still worth investing? In my personal opinion, definitely yes, because you have a good rental yield, as I mentioned, you have a good infrastructure coming up, and that leads to price increase because the supply is met by higher demand. All right, so one example I can give you here tonight that to get a bit more concrete, this is basically brought to you by ERA, of which I'm also part of. So if you want to make use of this opportunity, then please contact me later or in the next few days. Right, so Oka House, for example, this is a new launch that is coming up as a high-end development in one of the very upmarket areas in Bangkok called Thong Lo. That's 3-4 BTS stations from Nana and Asok and all this, where the Sukhumvit MRT is. So only a few minutes away. And Thong Lo features a lot of upmarket restaurants and clubs and some other exclusive developments. So Oka House would be located 5 minutes from Thong Lo BTS across Sukhumvit Soi 36. There's plenty of commercial space around it. As I mentioned earlier, the price in Bangkok is really, really affordable, especially for Singaporeans, but also the Hong Kong, Taiwanese, etc. Starting from only $200,000, right? You can buy a unit there for just over $200,000, out of which you have to make only 25% down payment now, so that's just over $50,000, and then nothing for 3.5 years until it's completed. As I mentioned earlier, what you have to really, really look out for when you buy overseas property is the reputation of the developer. This one comes from Sansiri. If you guys know Thailand or you have invested before, everybody knows Sansiri. This is one of the most premier and reputable Thai developers. They offer excellent quality of their houses that they build, and they're stock listed, of course, as well. Have been around for many years and just enjoy a good reputation, which is key. They can also help with property letting and management under their subsidiary called Plus, like a Plaza and PLUS. So the location of Oka would be here at Rama 4 Road, corner to Sukhumvit Soi 36. And if you walk up this soi here, you end up at Thong Lo BTS, which is in Sukhumvit Road, and just maybe 2 stops from Asok or 3 from Nana BTS station. So it's really, really central, which is quite key, as you've seen in reports earlier from CBRE, and obviously if you are an investor already yourself, you know that the right location is absolute key. These are a couple of impressions of Oka House. It's gonna be like a 47-story development with beautiful interior, a lot of fancy stuff with electronics and charging and what have you. And it's gonna have rooftop facilities as well, with a cinema and all this, where you have very nice views over the river and other parts of Bangkok. Right, so if you invest in such a thing, what you get is facilities on the 8th floor, swimming pool, etc. On the ground floor, concierge and all that. Rooftop has a garden, a cinema, etc. A sky lounge on the 47th floor, and on the 22nd also have some garden area for the residents. So this one is a bit small, I admit, but when I send it to you, maybe you can analyze it a bit more in depth. This is for this particular area where Oka House is located. We have done some analysis on capital gain what has happened in the past to some of the other developments that are around it. So basically feature the same location, and I mean they all made a handsome profit over a couple of years since they were built. And as you have seen from the study earlier, is expected from CBRE, which is one of the most reputable research companies in the real estate industry, that this trend will continue. In terms of rental yields that you can expect in this area, we're talking also about 5-6% in Bangkok, which you can enjoy once your unit is rented out. So I think it's definitely still worth investing in. So if you look at Bangkok and the perspective they have, firstly, you get a low investment quorum, which can give you a good return investment, coupled with your rental yield, 5-6%, potentially more, but I would not want to say that, because maybe doesn't. If you only get 5% in the end, you say, hey, what did you tell me? Huh? It's a very good price for this location, with good capital appreciation potential. So if you put all the pieces of the puzzle together, I think this can make an excellent investment that gives a good return on investment. Of course, there are other opportunities as well, not only this one. This was just an example. Why did I give you this example? Because actually Boca House is not launched yet. It will be launched on the 25th of November in Singapore, and thereafter also in Hong Kong and Thailand itself. So if you're keen on it, please contact me and I can help you facilitate it to get the best unit before the public launch and everybody else gets it. So people always ask me, hey Jochen, when is the best time to buy? Well, it's of course now. Right? The question is not when to buy, the only question is where to buy. Right? You have to look at the markets, what markets are profitable, and have future perspectives. And right now, I don't really think Singapore is there yet, although it might hopefully come up to be good again soon, in a year or two perhaps, I don't know. But Thailand is still definitely one of the markets that we can seriously look at. And as I mentioned, I'm not talking about it, I'm doing it. I just bought a unit, and I have a few already. This is because I love investing in Thailand, and I strongly believe it's still worth investing in. To answer the question of the title of the webinar, definitely is. So I would like to share one of the quotes I quite like from Bill Gates. If you're born poor, it's not your fault. But if you die poor, it is your fault. Of course, you could have done something in between. People like myself, I mean, I'm teaching property investing, how to do it. I'm giving opportunities to do it. But if you find reasons not to do it, then it's up to you. But if you do want to do it, please, as I mentioned, contact me. So for those of you who have participated in this webinar, I would also like you to give this gift. I can obviously see who's in and who's not. And for those of you who's in, I will send you this report from the Association of International Property Professionals, how to buy overseas properly safely. There will be some good hints and tips what to look out for to be on the safe side. So you can also bookmark my website, condonewlaunches.com. I will always be publishing opportunities there that come up for new launch as well in the future. So if right now is not the right time for you, that's okay. There will be other ones in the future. But if it is the right time for you and you want to avail of this opportunity that I've shared just now, please contact me. This is my phone number. You have my email as well. Just get in touch. So from my perspective, I'm done with the webinar, but we were we're a bit early, so we do have time for questions. If you have any specific questions, then please type them into the chat box, and then I can answer them for you. And for those of you who don't have any questions before we leave, I sincerely thank you for participating tonight. Stay in touch. If you have any questions about investing or which other opportunity we have, or you want to learn more about my course that I'm teaching, it's online now, it's available too. So you can learn from the comfort of your home. You don't have to attend my physical training class. There's a lot of opportunities. So just get in touch. So yes, I see someone is typing right now. Okay, very good question. The question here was, is it easy to manage the property if I'm buying for rental, but I'm not physically in Thailand? That's a concern actually a lot of investors have. Thank you for asking the question. Great question. There's two ways that you can do that to manage the property once it's rented out. Number one, you can do it yourself. And if you do a good job in the tenant selection together with the agent that you engage at the time, you should be able to quite easily manage it, actually. That's for Thailand, I usually manage my properties myself because it's fairly easy, and if anything, it's 2 hours flight. But I never really had to do that in 12, 14 years that anything was serious. I build up good relationships with my tenants. I don't squeeze them for the last part of rent or cause problem for them. And so if there's a small minor repair to be made, I just ask them to do it themselves. No point in me arranging a time for a contractor that cannot make it. So do it themselves, just send me the bill, I'll pay. So that's what I do. If you don't want to do that, actually there's a lot of property management company in Thailand that can manage the property for you, and they're fairly cheap. I mean, staff price in Thailand is very low. The labor is not much paid. So for a few thousand baht a year, you can get your property fully managed. It's totally hands off. They collect the rent for you. They talk to the tenant for you. If there's a repair, they do it for you. All you have to do is collect the money. So it's really, really easy there. So not a concern. But great question. Thank you. Any other questions? I think while you think about your questions, one question I usually get also from people is about the taxation. So when you buy a property in Thailand, you only have to pay like a transfer fee for the title deed to be transferred to you, which is 200,000 baht. Some developers might absorb half of it. Then in 100,000 baht, you went by 25 is like $2,000, something like that. And but that only has to be paid also upon TOP. Right, so in this case of Oka House, for example, that TOP is 2021 in March. That's when you have to pay it. Now only 25% down, nothing else. Then when you buy the property, also you only have to pay the transfer fee to the government for giving you the title deed, and then the sinking fund for the property, which is a couple of bahts, not much, and of course a yearly maintenance fee, like in any condo in any country in the world. Only if you sell within 5 years, then you have to pay about 3.3% tax. If you sell after 5 years, it's only 0.5% tax, stamp duty, basically. So it's really, really low taxation, and that's also one of the great advantages actually for Thai property. Any other question? Okay, someone is asking about Philippine property. We will be. Right now we're looking for some. Next year we will be also offering Philippines properties. They also have pretty good rental yields and low price. Okay, so okay, some more questions coming in. Just hold on. Yes, for Philippine property, two of you asking already. We will have something next year. Right now, not yet, but it's coming up. But we do have a constant stream of Thai properties. If you want this one, let me know. If not, there will be another one coming up. I think every other month or so, every 2 months, because Thai is one of the most popular overseas destination outside of Singapore that investors like to buy. Okay, so then if you have no more questions, then thank you very much. Of course, if you have any other questions, just contact me directly and I'll be happy to answer them for you. Okay, so here's my contact again. Thank you very much for joining tonight and enjoy the rest of your evening.